Well, for more, we're joined now by Alexander Prosviryakov, who is the president of the Moscow-based investment bank, Whitestone Capital. Thanks so much for speaking to us. First, on what President Erdogan just said there, is it feasible for Turkey to depend on local manufacturers like Vestel, for example, rather than on U.S. electronic imports?
Yes, Andre. Yeah, I think it is. I think the more products will be of the production of Turkey, it will be better because Turkey is now dependent on, they have a current account deficit, so they're importing more than exporting. So any decisions aimed at lowering the imports will help the country. So of course people got used to all the foreign electronic devices, so the faster you can make your own and make them the same quality as the foreign, it'll be better for the country and for the financial stability of the Lira and of the economy as a whole.
Okay, but let me ask you this. Is it economically realistic for Russia and others to propose avoiding the dollar as a trade currency and rely on regional local currencies instead?
Yeah, this is what we are doing in Russia already because we are faced with the sanctions already from 2014, and we started to ask our trade partners to start dealing in the national currencies because we want to avoid the dollars the same as Turkey wants to avoid them now. And it is indeed feasible. We started to do this with our closest neighbors, but we are switching to national currencies with countries like China. Of course, with the European Union, we're trading with the euros. And I think this is absolutely feasible in Turkey because we have done it already in Russia.
You know, it's interesting because you say it's feasible, but I mean, I heard another analyst say that, well, it's never been tried before. But it's been suggested so many times before. And it's almost like I feel, you can correct me if I'm wrong here, suggesting that Bitcoin could take over as the global currency. It's been around for a decade now, but it's still on the fringes, and we've talked for decades about using smaller currencies rather than relying on the dollar, and that's just never happened either. So really, I mean, how realistic is it?
Yeah, but Bitcoin is not really a currency yet, and if you look at the volatility of the Bitcoin, no, I think nobody wants to take that risk because it can go down like 10–20% per day, and even with the swings we saw in the Lira, it is not as volatile as the Bitcoin. I think the easiest solution is to really start trading in national currencies, but in order to do this in Turkey, we need to establish the swap market between the Russian ruble and the Lira, so the importers and exporters, the companies, the banks, they have the opportunity and the instruments to hedge their exposure to the local currencies. Of course, it's going to be harder to deal in commodities in other currencies because everybody used to the dollar price in oil, for example, and other commodities. But this is also feasible, not that easy as other consumer goods, for instance. But still, I think we should go that way because the U.S. policy actions are very unpredictable and they are hurting all the value chains, all the trade relationships that the countries have. And this is indeed something that countries are looking for, and I think is going to be, we will see this in the nearest future.
Well, it comes down also to those countries being able to trust each other's national currencies. We'll see how that goes. I'd like to thank you so much for joining us, Alexander, there from Moscow.